G'day folks, welcome back to Pete's Investing. It's 13th of March 2024. This is the iron ore technical analysis. The bearish trend continues, and we'll just keep also an eye on those tops and bottoms of the arrows which introduced recently. Plus I'll introduce a trading idea for those new to the channel. So as always, we've got the weekly, daily and hourly. So if you're trading on the hourly time frame, we look at the weekly and daily trends to focus on. So at the moment, the weekly, the daily and the hourly are all showing the ADX 25 with a bearish outlook. That's our major trend indicator. Likewise, we'll look at the CCI 150 as a trend indicator when it breaks below these moving average bands. Let me just blow that up. So when the CCI breaks below the moving average bands, down there, you can see that's where we go short. And when it's above the bands, we go long. When it's within the bands, we avoid taking any trades. So we have to make sure that the weekly and the daily are aligned if we're trading on the hourly in the same direction. So again, if you're trading the daily, we make sure we look at the weekly and the monthly. So just bear that in mind. So in this case, we're going to demonstrate trading on the hourly time frame. So here on the weekly, we've actually broken below the moving average band, so only short trades to be taken. Likewise, the ADX supports that, so we use a couple of indicators to support our trend. On the daily, we did have this Fibonacci between that low and that high in our previous video, and we did say look out for that 61%, and that was our minus support area at 841, and it's actually broken through there in the last couple of days, and it's making it lower price movement. So what we're going to do now is it's already breached the 61%, which possibly means it may go a lot further. And what we do is we lower that Fibonacci retracement in the same range, that range there. So we see if it's going to actually bounce from that 61% of that bigger Fibonacci range. So it could possibly bounce from there, or it actually might fall further. And if it falls through that Fibonacci range, that range there, we're going to expect a lot further declines. Now I've got this couple of support lines here. I've got this horizontal support at 657 and this diagonal support which cuts through those bottoms. So it could possibly land, and that'll be our next level of support on that diagonal trend line. So I'll keep an eye on that. But notice the CCI 150 on the daily is also declining. It's broken down through the moving average band, so that allows us to trade short positions as well. On the hourly, again, you can see that it's fallen through that minor support area, and the hourly is also broken, just a fresh breakout on the downside of that moving average band. These bands, by the way, are available in the description below with a video to reference it there if you want to know how to draw those. And likewise, we've got these, go back to the daily for a minute, we've got these arrows, these red arrows indicating potential tops, and these blue arrows indicating potential bottoms. They don't always pick the extreme top or bottom, they just actually look at a potential retrace. You can see there a few of those. That was a bit of a retrace to the downside, very slightly, but some of these pick almost the tops and bottoms, as you can see there. Again, that's in the description below for those video links. So we'll go demonstrate now on a trading strategy. So remember, we only trade on the smaller time frames. Like in this case, we're going to demonstrate the hourly, when the weekly and the daily in this case are both aligned and they're both showing short positioning below these moving average bands. So if we jump to the trading strategy, this is the daily chart again, and this is the 1 hour chart using the average down approach. This is the 1 hour chart using the stop loss approach. So again, I've put a back test here, beginning at that point there when the CCI 150 breaks below the moving average band. Remember, the weekly and daily are also in a short positioning. So this is the daily. We're trending in line with that, and we'll let this run on the short positioning with the average down. It averaged down 3 times there, and the rest were single trades made. So the average down approach generated $57, and the stop loss approach generated $6. So again, depending on what size contract you trade, that's the I'm using the iron ore minimum contract size in this example. The major rule is you trade when the CCI breaks below. You go short only. We don't take trades when it's within that band, and we go long when both the weekly and the daily break above the moving average band. And in terms of the minor strategy, if I just blow this up, we trade short when the Heikin-Ashis, we use Heikin-Ashis on the price chart. When the Heikin-Ashis are red, we go short. When the Heikin-Ashis are green and both the weekly and daily are long, we go long on the 1 hour time frame. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.